Hello everyone, welcome to Market Snapshot for today. So, where are the markets headed? I think markets are headed towards volatility. Uh, Nifty 50 was the strongest index yesterday. It, it remained strong throughout the day with a gain of almost 1.09%, closing at 24,334. Nifty 500 started off very poorly. Was looking just in continuation to what happened on Thursday's session, was looking really bad unless and until I think last half an hour or so a lot of momentum came back, which is the positive I would say, and closed at 23,336 at 0.45%. uh, Nasdaq, I think, like I have been saying, it was not showing signs of strength. Mm, it was really struggling, and finally, I think it has lost a lot of momentum. S&P 500 also, I think, a lot of gains were evaporated yesterday. Let's see overall how the markets have done. This is Nifty 500 advances to decline. Advances were 194 to declines of 306. That should have been 306. New highs are 12 against new lows of 488. The breadth part, and I think it just deteriorated a bit. Honestly, it was looking terrible, but I think the silver lining was a lot of it just came back towards the last 15-30 minutes. It was going like a really downhill. Looking at the numbers, above 20 MA 245 stocks, above 50 MA 304 stocks, above 200 MA 288 stocks. Looking at the charts, Nifty 50 was like, I mean, I think it started from the word go and it never looked back. It was a very strong day for Nifty. Extremely good participation, extremely good breadth. Like whatever it just, if you look at here, the way it started is it just never gave back an inch to the market. It just continued. I just hope it just keeps continuing doing so, because like Nifty has really struggled. The kind of force it had yesterday, we just definitely want that to continue for at least next 3-4 sessions, and that will really make things better for Nifty. S&P 500, sorry, Nifty 500 again, like started off very poorly, but then I think it just gained a lot of it. So I think that's a very good positive for the Indian markets. When I talk about the Indian markets, I also want to highlight like all the small caps, micro caps. I think they all have struggled. They all were struggling like really bad. Like Nifty 50, Nifty 200, Nifty 500 were still fine, but maybe if you look at Nifty small cap 250, Nifty micro caps, they or Nifty total cap, they were struggling big time. But then somehow I think towards the end of the session, a lot of breath came back, which is like really positive for Indian markets because it was going nowhere. The overall summary, Nifty 50 looks bullish, participation is strong, breadth mixed. Nifty 50 bullish, participation weak, and breadth mixed. So overall, I think what is happening right now is like I have been telling this from last 5-7 sessions. The liquidity is flowing towards defensive sectors, and majorly, it has started off with the small caps and micro caps in those sectors, and now it is moving towards larger caps. For sure, like I have been saying, it is not a complete bull run. At the same time, it is not bearish as well. There are pockets of strength here and there. You'll have to scout the entire market to understand what is happening. Just believing that trend technical analysis will help you ease out. I don't think that is how the markets are. Markets are pretty complex, and I think a little bit of scouting is needed if at all you want to make gains. It is not a time wherein you can be 100% bullish. At the same time, it is not a time wherein you should be 100% bearish. And I have been telling this, I think last 10 odd sessions, that your exposure should not be more than 50-60%. And I think when we look at US markets today, we will realize what has been the reason I have been so particular about not having an exposure of more than 50-60%. Let's move ahead to the US market. This is S&P 500. If you remember, post 20th of June, this index has looked so good all the time, but yesterday was the sudden collapse. The advances came down to 145 against declines of 355. See, the thing is, these things cannot be anticipated unless and until, either you are tracking a data, I mean, which you yourself prepare day in, day out. Because see, chart will take its time to tell you where it is headed, what will it do. I mean, for sure, it is not a forward looking indicator. And that is the reason, although S&P 500 had been looking good, I kept on telling that your exposure cannot be more than 50-60%, because overall the market sentiments were not looking good. Dollar was rising, yields were rising, Nasdaq was deteriorating day in, day out. Russell 2000 was doing well, and suddenly, since July began, it has started deteriorating. So, I mean, the sentiments could not have ever been 100% bullish. And that is the reason, not trading was not a solution. 50-60% of exposure would have been the best solution, and if at all, you would have listened to it, and maybe, you would have followed it. I'm sure, even if yesterday was a bad session, your PNL might not look very bad. And that is the reason, it is not just looking at charts, that chart will reveal everything. Charts do reveal everything, but I think it takes little extra time for them to reveal everything. Looking at new highs, 21 new highs against 479 new lows. The breadth, this did not deteriorate much, which is again a positive. But then, like, I mean, when I say deteriorate much, each of these indexes were down by almost 5-7% on their breadth. Again, not a very good sign, but then, yeah, amongst everything which we cover, still remains pretty decent. I would say above 20 MA 292 stocks, above 50 MA 320 stocks, above 200 MA 331 stocks. So the breadth is still a little stable. And this is Nasdaq 100. Just look at the chart. I mean, it was all bullish, 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 and just yesterday it just gapped down. I don't know how many of you have been following me, but then, uh, see, I was not knowing this is 3rd of June. This is when the markets made the top. I don't have a provision to tell you this is the top, this is the bottom. But ever since, I think somewhere here, this ride started, I kept telling that I am not making any new positions in Nasdaq 100. The reason being, this rise is not supported by the data. And somehow that is what happened, post this day, the markets never recovered, and it just kept deteriorating. People would have made some money for sure, but then trust me, a lot of them would have given more stop losses than the money they would have made. And this is what happened. I mean, when see this, if you show this chart to anyone, I don't think anyone will say this is a bearish looking chart. But it became bearish because, the strength was never coming back after this date. Not after this day, somewhere here it had lost its strength, and then it never came back. So that is the reason, I think markets are pretty complex. You need to study certain bit, I won't say, everything, but then at least you should definitely be looking at what the dollar is doing, maybe a little bit on what Fed is trying to do, and then the charts. I mean, and in charts also, if you're just barely looking at charts, they will not indicate anything. You need to look at how the participation is working, how the breadth is sustaining. If these things are not supportive of rise or fall of the market, that is where your clue is whether you need to be bullish in the market or bearish in the market. So S&P 500, like I have been saying, this was my strongest looking bet. But yesterday, I mean, any market or any index cannot move in isolation. The other two pairs like Nasdaq 100, Russell 2000 were not supportive, and that, you know, became a part of even S&P 500. I would not say I'm still bearish on this index. I'll still bet with a 50-60% exposure. But then, like I have been saying, I'm not bullish for sure. Like in any market, I'm playing my conservative bets at a 50-60% exposure, and that is how I'll keep continue to play till the time, breath completely deteriorates. Russell 2000, I mean, closed pretty much where it was, a little bit down, I would say. Uh, uh, I think yesterday this was the strongest amongst the three indices in the US. But overall, I think for now, for me, Nasdaq 100 and Russell 2000, now I'm not looking towards. I'm just concentrating on S&P 500, and that too, if the breath keeps deteriorating, maybe that also will. I mean, I will consider not to trade there too. The overall summary. Uh, Nasdaq 100 has become bearish now. Participation is weak. Breadth has become mixed. S&P 500 bullish, participation weak and breadth mixed. Russell 2000 bullish, participation weak and breadth mixed. See, overall, I think for me, it is only S&P 500, and that too with an exposure of 50%, 60% at the max. Definitely not aggressive about it. See, the thing is, the markets have been like the markets are now showing signs of volatility, but then I think the data was already pointing towards what is happening. So I think just be cautious. I won't say don't trade, but then for sure you need to limit your exposure in both the markets, be it India market and the US market. US yields, I mean, it had kept growing, right? I mean, almost a month now, or maybe more than that, it has growing. It has been growing. So for sure that this was never going to be good for equity, and that is what we are reflect. That is what is now getting reflected. Dollar at 175 again. It is not leaving its ground. It is just standing firm. Not a help for equities. And see, VIX throughout has been neutral. I mean, only at people consider when VIX goes above 20, that is when they'll see volatility. But VIX at 15, 16, see, VIX will only reflect. It cannot indicate you anything in advance. It can only reflect to what has happened. And that is the reason, it is slowly, gradually trying to rise while the volatility has already been there. And it is extreme only, if you consider the breadth of S&P 500 yesterday, it collapsed by all, not breadth, the participation collapsed by almost 50%. Breadth was down by almost 7 to 8%. What more than do you expect in such a huge index? If the breadth has gone down by 7 8%, the participation is down by almost 50%. It is huge volatility, but the VIX will only take its time to reflect everything. So although it's a good meter, but then I would say, I mean, your personal data would be of more help to you. Bitcoin, I find it to be the most reflective of any indicator available. See, it has already, moved down that no, I'm not willing to go ahead because the sentiments are not looking good towards risky instruments. Gold, I think pretty much where it was, it is showing signs of strength. A lot of value buyers and miners have started, seeing strength in gold. But then I think people who consider technicals, still long way to go. Maybe on the value front they find value, but I think for me it is a no go for at this point of time. Looking at the charts, dollar is getting stronger, not a good sign for equities. Bitcoin has sh- shown almost no movements from last three trading sessions, basically indicating that market is not sure where to go, whether to go bullish or bearish. Gold is showing some signs of strength, but we'll have to wait and watch till the time it doesn't retest 50 MA. For me it remains bearish, but for time being I'm not trading gold. So what is the overall picture for the Indian market and the US market? So Indian markets, I think this or both the markets are exactly where they were last week. Also, we had health reality, and in place of consumer durables, we had private banks, and this week we have consumer durables. In case of US, it is financials, healthcare, and in case of energy, we had industrials. So I think energy because of the US Iran crisis, and consumer durables instead of bank. Maybe, like I have been saying, both the markets are indicating one simple thing, that the market is headed towards defensive sectors, and maybe that is the reason we are seeing the now maybe larger indexes doing well, because most of these sectors have like heavyweight companies based from large sectors, large indices, and that is the reason we'll be seeing a strength. My overall, takeaway would be, don't be aggressive. See, don't be defensive in this market. Like, you should not be like, I won't trade. That is definitely not the best thing to do. But you cannot be aggressive because markets are very volatile, mm, I mean, it rises, it collapses, dollar keeps rising, yields keep rising, Bitcoin going nowhere. So I think overall the market sentiments are not very, very positive. At the same time, they are not extremely negative. The exposure cannot be more than 50-60% for both the markets, and that is how you should, conservatively be playing your bets. Looking at some of the strongest names which I find for the Indian markets, it is Exide Industries, HSCL, Sona Comps, Fluorochem, and Federal Bank. And for US market, it is TFN, GTLS, Tech, DRH, and VLO. So these are my strongest bet for the coming week. But like I said, I mean the exposure has to be 50-60%. In case if you're not, if you don't understand what exposure of 50-60% means, I'll try to explain. uh, for instance, maybe you have a capital of 100,000, so you should not be planning your trades according to 100,000. Maybe plan your trades as per 50,000 or 60,000, not more than that. That is what, see, because this game is all about couple of things. For instance, you need to survive. Somehow you need to survive. Only if you survive, you will have your good days. The second bit is minimize your drawdowns. See, eventually everyone makes around about similar kind of returns. When I say everyone, it does not means uh, absolute in absolute numbers. Obviously, there are great traders, investors, who will do. But then, to begin with, the benchmarks cannot be great, right? I mean, the benchmark first would be, beat the uh, fixed cost instruments like FD. The second would be, try to be somewhere around the benchmark, which is Nifty 50 or Nasdaq 100 or S&P 500. So your first objectives would be to be around these levels. And for that, you need only couple of things. You keep surviving the games, and second, minimize your drawdowns. How do you minimize your drawdowns? You minimize your drawdowns by playing less when the markets are not very favorable. That is what you need to do. And I think that is what it is for equity markets. Have an exposure of 50 to 60% in both the markets, Indian market and the US market. Index wise, I think for Indian markets, I would still stick to Nifty 500, Nifty 200. And for US market, it is S&P 500. Sectoral, I think for Indian market, it is healthcare, reality, and consumer durables. Even private banks are there, they're not doing bad. And for US market, it is health, financials, energy, and even industrials. So these are the sectors which you can look at, and these are some of the strong names which I like. For I think for your day-to-day exposure, Bitcoin seems to be doing fine. There you can definitely look for certain bets. Gold for me is a no-go right at this point of time. So I think I'm not doing gold. Maybe if you find opportunities, you can look into that. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.